welcome to Applied Business Strategy. Pretty much exactly 1 year ago, I started an experiment. I started recording the lecture sessions of my business strategy class and published them on YouTube. Now, the original intent of this was to provide another means of learning and preparing for the exam to my students, because the lecture sessions on Zoom are actually like 3-hour sessions, and I thought that no one really wants to re-watch me talk for 3 hours and then use that as exam preparation. So what I did is I prepared 20, 25, 30-minute versions of those long lectures and published them on YouTube. Now, it turned out that many people around the world actually watched those sessions, which really surprised me because it was really intended only for my students here. But I got a lot of questions, comments, feedback from around the world, from Africa, from Europe, from other parts of Asia. So first of all, I would like to thank all of you who watch these videos who are not my students for all those questions, all those comments, the positive feedback that I got, also the negative feedback or the constructive comments that I received. And that is always very helpful for me also to improve my sessions. And every time I teach something, I also learn something new. So thank you to all of you for watching my videos. Now, one thing that I noticed when I re-watched and reflected on the content that I had produced is that actually the purpose of this of the lecture overall is to provide something that is very practical and applicable for strategy teams and for strategists in corporates and businesses, that they can use in their day-to-day life and in their day-to-day environment. Now, when I rewatched the videos, I realized that the content actually turned out to be rather theoretical because I really boiled it down to only the key frameworks and tools and methodologies. So this I would like to remedy with this lecture series. So in this series, I would really like to focus only on applications of those tools and frameworks and methods. So this is the first session in which I would like to focus on macroeconomic analysis. So if you remember if you have watched the series of lectures, one of the things that we talk about in the business strategy lecture series is environmental analysis, external environmental analysis. And so the external environment can be dissected into 3 parts. First, the macroeconomic environment, then the industry environment, and then competitor analysis. So in this session, I would like to focus on that first element, which is the macroeconomic environment. And what I have prepared for this session is the work that I literally just finished with my team. Every year around June, July, August, we are digging into the data and analyzing our macroeconomic environment. So what you see here are the real slides, the real results that we prepared for this year's strategy session. There is nothing secretive or there's nothing confidential about this data. It's all public information. And I would like to share with you how I look at macroeconomic data and how this looks as part of an overall strategic thinking process. So let's dive right into it. So when starting out analyzing the macroeconomic environment, and I use Thailand here in this case because our business is located in Thailand, but this can be applied, of course, to any other country in the world and any other environment. You usually start with the GDP overall. So what we see on this slide, and let me get the pointer here, is an analysis taken from the World Bank in this case of the last 12 years of GDP of Thailand. It's measured in billion US dollars. And to make it a bit more visible and improve the visualization, I actually cut short those bars so you can see the up and downward movement a little bit better. So this is the GDP of Thailand from 2012 to 2022. So what can we see here? A couple of insights. So first of all, in 2013 to 15, we had a crisis in Thailand, basically political unrest. Tourists stayed away from Thailand during that time, or less tourists were coming. So we saw an economic decline during that period, about 2% per year from 2013 to 2015. Then after 2015, after the political situation was basically calming down, tourists really start coming back and the economy started to recover, and we saw a period of basically 5 years of very strong economic growth, growing at 8% per year and reaching 544 billion US dollars as total GDP. Now, in 2019, at the end of 2019, beginning of 2020, COVID hit, and Thailand, of course, was very badly affected because it's a tourism country, and as tourists stopped coming and we had lockdowns, the economy really tanked. It declined by about 10% and reached about 500 billion US dollars in 2020. And since 2020, we have been in a recovery mode. Now, as of the latest forecast in 2022, we are still 4% below the 2019 level. So we still haven't recovered to pre-crisis levels. Expectations for this year, according to the World Bank, is a growth rate of 2.9% for Thailand. It's not really that big. So tourists are still coming back, and the economy is recovering slowly. So this is an important input into the strategic thinking process to know like how is the macroeconomic environment, the GDP overall. And then we can break this down a little bit further by quarter. So we see it in a little more level of granularity. And what we can see here is actually that even prior to, and this is growth rate in percentage change, even prior to COVID, the economy was already doing not so well. So growth rates were actually coming down. And then, of course, when COVID hit in Q1 and Q2 2020, the growth rates were highly negative. Since quarter two in 2021, we start seeing economic recovery. Q3 was again difficult because we had another wave of COVID here in Thailand. But otherwise, economy is recovering and we are getting close to the projected 2.8, 2.9 growth rate for the year. But it is still happening at a rather slow pace. So this pace is expected to pick up as we go into the second half of the year 22 and the year 23. And some of the indicators that we are going to see now are already showing that. So again, for our strategy process, we can expect GDP growth of between 2 and 4% for this year and for the next year. Now, important when we look at the GDP growth is also to look at where this is coming from, which part of the economy, because not all parts of the economy are growing equally, and we see that here very clearly. So the major driver of economic growth in Q1 was actually imports and exports. So it was mainly foreign trade that was happening here. The consumption within the country in Thailand is still growing at a relatively slow rate compared to imports and exports. And then if you look at the production side, so it's mostly driven by wholesale and retail, agriculture and manufacturing, especially accommodation and food. So that's the hotel sector, the restaurant sector, also the food sector overall is still actually negative year on year. So still not recovered. So this is an important input factor. For example, if you're in the food industry or in the hotel industry, you can see that we can't expect too much yet. We are still in an early recovery stage here. Now, one other indicator that is important to look at, which is a little bit a forward-looking indicator, is the private consumption index. So this measures on an index with the year 2000 set at 100, at level 100. How is the private consumption doing compared to that base year in 2000? And you see since 2019 it has been a bit of an up and down, but we see overall a downward trend that hit its lowest in the second quarter 2021, so last year, but has been recovering very rapidly since. And as of April this year, which was the latest data that I could get, it reached the highest level, even higher than in 2019. So even higher than 3 years ago prior to the crisis. That's a very positive indicator. That shows that the private sector is seeing recovery, is believing in the recovery, and starts to spend again. Once again, if you are in retail, for example, or if you are in the restaurant or in the hotel industry and you see that this is actually coming, you can see that at least the domestic travel and the private consumption domestically is already improving and expected to further recover. And once the tourists return, then this will be another boost to the economy. So that's rather a positive sign for the Thai economy. We talked about exports already, so just wanted to show the chart that analyzes that in a little bit more detail by quarter. So we see that the recovery happened actually in 2021 already, and we have returned now to very healthy and steady growth rates of about 10% of export growth versus the previous year. Now, after having looked at those economic indicators that are more indicative of what is going to happen in the economy in the near future, there are some interesting and partly also concerning long-term trends, and that's what we start to look at here on this slide. So one of those long-term trends that could impact the economy in the years to come is household debt. And I use red here for a purpose because it is actually something that is negative, especially as it grows like this. We saw household debt growing at a rate of 7.6% per year since 2010. So every year, the debt level of Thai households grow by nearly 8%. And that is faster than the economic growth over that time period. And therefore, it's not surprising that the percent of GDP that is household debt also increases from around 60% in 2010 to now almost 89% in 2021, which is the latest data. That is concerning, especially when we compare it to other countries. And you see here some comparisons like China, 61%, India, relatively low at only about 35%. Other countries in Southeast Asia, Indonesia, Malaysia, Singapore, all have lower levels of household debt. So therefore, this high level of debt is a concern, and it might impact private consumption going forward if we don't see an improvement. Of course, COVID, you see here another jump in 2020 and 21. So COVID affected this level of household debt. So there is some hope that with economic recovery, that level would also stabilize, maybe even come down a bit, but it is still at a relatively high level that is of concern for businesses that deal with private consumption or that are affected by private consumption. Public debt, on the other side, is fairly under control, has been fairly under control for the past couple of years, has, of course, as in most countries in the world, increased as governments spend on COVID relief measures, I should say. But you see here there was a big discipline in Thailand between 2012 and 2019. So basically the Thai government over this period maintained the public debt level at around 42%. So despite the economy growing, and the debt of course also growing accordingly, but the percentage share of the total GDP was kept at around 42% and was only given up as the COVID relief measures hit and the government spent on this one. So we see a high level of household discipline in Thailand actually. So nothing too alarming or concerning from that side, even at 58% compared to the public debt in other countries is still manageable and under control. Now, the next indicator that we normally look at is inflation. And you see here that something is happening. Over the past years, 2017, 18, 19, inflation rate has been rather low in Thailand. So you see the different lines here. The red line here is food inflation. This is one that is particularly interesting for me personally because my business, or the business I work for, is in the food sector. So we saw that coming up already prior to the crisis in 2019. Other parts of the economy, so the non-food inflation was basically around zero in 2019, and overall headline inflation, which includes the total inflation, including oil and fresh food prices and so on, has been rather stable at between 1% and 2% always. Core inflation, which excludes those effect of oil price and so on, has been really low, like below 1% over the past years, and consistently low as you look at this dark blue line here. Now, after the crisis, something has happened. So first of all, in 2021, as we went through lockdown measures, food inflation went to a deflation actually. So we saw a downward trend there. But towards the end of the year, as the economy was recovering, the prices really move upwards. And this is a trend that we see globally. But especially food inflation now hits rates of 6 to 7%. And the headline inflation, which includes effects of fresh food and oil and gas and so on, is already hitting like 7%. It reached 7.1%, in fact, in May 2022. So from this perspective, there's something to worry about for the economy, especially also, again, for private consumption. This inflation indicator combined with high household debt is actually a dangerous mix. If the salaries are not moving up in line, or the wages are not moving up in line with inflation, then households are even harder hit by the inflation and by the high level of household debt. So that is something to be concerned about. Of course, for food companies that might be able to pass on prices to consumers, this could be something positive, but then it remains the question whether those companies actually can pass it on, since the household spending or household debt is relatively high, and the household spending might therefore be affected. Now, one area that brings hope to Thailand is definitely tourism. So we saw a record of 40, it should be actually million arrivals in 2019, and that has come down quite significantly. Basically, still with the current forecast, still reaching only 75 to 80%, or 20 to 25%, I should say, compared to pre-crisis levels. So we are 75 to 80% down versus 2019 levels, so a significant decrease still. So on the positive side, there's room for improvement. The capacity of hotels and so on is there, so tourists just have to come back. So you can see that as a negative, as it's still in very slow recovery, but also as a positive, that there's significant room for the economy to improve. Now, interesting here also, as tourism is a big driver for the Thai economy, is also where the tourists are coming from. So this is 2021, and despite the lockdowns globally, we saw still the highest number of tourists coming from China, or Greater China, which is 29% of the total arrivals. So that, of course, poses a risk as the Chinese government pursues the zero COVID strategy. There is a risk that Thailand's tourism recovery will be affected by this further. A positive part is that about slightly over 20% of the arrivals were from ASEAN countries, so from neighboring countries, where we actually see the lockdown measures being lifted and tourism coming back. So this is definitely something that is positive. Russia, this is because I mentioned this because of the Ukraine conflict right now. Russia represents in 2021 about 4% of incoming tourists. So a question on whether these tourists are coming to Thailand during the wartime, but the impact might not be that high because it's only representing 4%, but something to watch out for as well. Now, the last big trend that I would like to look at is demographic trends. So this is a bit away from the economy and also longer term looking, but we see something alarming here, which is that Thailand has a very rapidly aging population. So the population actually, despite the population still growing between 2008 and 2018 from 66 million to 68 million in Thailand, is aging quite strongly. So you see here people 60 years and older. In 2008 it was 12%. Now 10 years later in 2018 it already reached almost 18%. So almost 50% growth of people who are 60 years and older, from 12 to 18. Yeah, so 50% growth. That is very significant. Also in the younger population we actually see the population declining. So people who are students or younger, meaning reaching the age of 24 or younger, have been 35% of the population in 2008, and that has declined to only 29% in 2018. So Thailand is really turning into an aging society. Now the main working population is still intact, so that has almost been unchanged, but you can see here from the graphs that the gravity has shifted from the 25 to 39 year olds more towards the 40 to 59 year olds. So this is something to watch out for. It has opportunities, but it also has complications that arise from this in the years to come. And sorry, before I move on, I should mention that it is expected to reach significantly higher age numbers in the years to come. So this trend is not a short-term thing that happened over the past 10 years, but we see this trend continuing, and the forecasts suggest that this will continue well to 2040. So another 20 years or so of this continuing trend. Now, at the end of the economic analysis, I always like to look at the neighboring countries and countries outside of Thailand, just to have a benchmark and also to see if there are opportunities overseas in terms of investment, maybe export opportunities for the business as well. So what we see here is, and I just give you the highlights, that GDP is actually growing quite strong in other countries. So this is the expected GDP for 2022, as it says here, 2022 projections, is actually higher than Thailand. So Indonesia, Malaysia, Philippines with 6%, and Cambodia are all, and even Laos are all expected to grow faster than Thailand. Remember, it was about 2.8, 2.9%. Why I say even Laos is because Laos has challenges with its currency that affect the economy currently, but the GDP growth forecast is still quite positive. Myanmar, on the other hand, because of the political conflict and unrest, is expected to grow only 1.6%, so slower than Thailand in that case. Inflation rates everywhere reach or expected to reach around 3 to 4% in that range. Laos is slightly higher with 6%, so that reflects part of the economic challenges that the country is facing at the moment. Looking a little bit beyond to more developed countries, Singapore, for example, GDP growth is a little bit slower than the developing markets that we just looked at in ASEAN. But you see like countries like Singapore, the UK, Japan, all Korea, Taiwan, all growing at 2 to 4% in that range. With inflation in the UK quite high at 7%, but elsewhere in Singapore, in Taiwan, in Korea, all around the same level of between 2 to 4% that we saw also on the previous page. So this is just something that can help maybe define an export strategy or an investment strategy overseas or something like this. So it's also good, even if the business is mainly located in one country, to look at least at neighboring countries or get some benchmarks from other countries to see how our country or the main country that we operate in is doing compared to others. Well, and that brings us to the end. So just the key takeaways, which I also like to summarize at the end of the external environmental analysis session. So key takeaways for the macroeconomic environment are 4 points. First, Thailand's economy is expected to recover in 2022-23 with export and import doing quite well and the tourism sector recovering. Inflation is high and so is household debt, and that is a threat potentially for lower income classes, especially who see that their purchasing power is getting less and less. Also a trend that is very important to watch is the demographic trend, so the aging population, which is very relevant and will become even more relevant in the next 15 to 20 years or so. And then internationally, the neighboring countries, other ASEAN countries, are growing at rates of above 5%. So that is also expected to be ahead of the inflation in those countries, which is interesting. So this brings us to the end of this session. I just wanted to give you an overview of how this environmental analysis looks like in reality. So again, these are real slides from our strategy pack for this year. And I do this analysis every year in a similar way of form. Sometimes there's new indicators that we look at, but basically these are the indicators that we have been tracking for the past 10 years or so as we prepare our strategy. One last remark. The analysis of the external environment is only as interesting and as relevant as the insights that you can generate from that. So what is very important is as you go through the data, and there's lots of data out there, as you go through the data for your country or for your company, you have to look at, of course, the indicators, but also try to generate insights and implications of what those indicators might mean for your business, for your environment that you are operating in going forward, and how that might impact your strategy. Thank you for watching.